Tech stocks had a volatile May, but large caps have since largely recovered, with standouts like Amazon and Nvidia up well over 10% since their lows just a week ago. Meta also up, although it fell slightly on yesterday's news that Sheryl Sandberg will leave the company, at least step down as COO. Joining us now to break down tech's moves, Alan Patricof, chairperson and co-founder of Primetime Partners. He's also chairman emeritus of Graycoff. Alan, great to catch up with you. This whole landscape shift that we, I guess, have seen across tech with public values really coming in pretty hard over the last year and a half, and then filtering into what's going on in the private market. You're now hearing about retrenchment mode in terms of VC-backed companies, layoffs, people watching spending. Does that ring true to you, kind of running across the companies you're looking at, or not?
Well, certainly in the last month, I think everybody's had a moment of all of a sudden facing the fact that a lot of companies were financed in the last year or two at some extraordinary valuation multiples, that is, and companies who really didn't have earnings to justify it. And it's happened so many times before. I mean, I don't want to recount all the cycles I've been through when exactly the same thing happens, and all of a sudden it's waking up one day and saying the emperor doesn't have any clothes on. How am I going to get the next round of financing? So what happens is there's a retrenchment and a focus, a very quick focus on where they're going to get the next round of financing and how to make sure all the companies in the portfolio have sufficient cash to get through. It was 12 or 18 months. Now everyone's talking about 24 or 30 months. So I think there's been a sobering impact in the private market, reflecting what's happened in the public market. And also, with the public markets, the IPO markets slowing down, if not the gate closing, everyone has to realize they've got to survive on their own without looking specifically to public markets in the near term.
For sure. And, you talk about all the cycles that you've seen and how it obviously feels familiar. But maybe one thing that's somewhat different this time around is that you had tech companies that were, top 5, top 10 market cap companies in the world that 12 years ago were startups like a Meta. I mean, that's been extraordinary, the way you've seen these huge markets really exploited in that way. And now you have almost an early middle age for some of those companies. And now we talk about Sheryl Sandberg moving on as the longtime COO of Facebook. Does that play into what you view as the opportunities here? If a giant like that is also in the mode of kind of tightening its belt and looking for its next move, what does that mean for companies along the chain?
Well, it's inexorable that companies, as they get bigger, the challenge to increasing at double-digit percentages becomes more and more difficult. And whereas a lot of these companies were, even in their very early times, not that long ago, of quarterly changes and annual changes in growth rates, were 20, 30, 40% growth in a quarter and a year. I think you're now at a point where you're seeing the changes in growth in revenues down, still double digits, but pretty close to single digits. I mean, 6, 7, 8%. Maybe they're crossing through the threshold to 10 or 12%, but you're not seeing these extraordinary percentage increases. And at some point, people realize they're becoming similar to the IBMs of the world. They're part of the establishment. And I think that of the companies you mentioned, I think that's the case. They have fluctuations of earnings up and down. Their revenues growth has slowed. And in the meantime, their PE ratios for some of them are fairly significant. A company like Amazon, for example, whose PE ratio I think is still very, very high.